All right. Good morning, everybody. Back to do it again. NASDAQ is up the most, so we kind of got out of the small cap overnight dominance, but they are up to 0.5%. Then the ES and the Dow coming in behind that with China flat. We're going to get more manufacturing data today. The number's a little wide, but like I shared in the chat, the width alone may not be the issue. Instead, a surprise number could be the issue. So previous was 23.2. The mean forecast is 10. If it comes in as a surprise, then we could see a reaction. Otherwise, if we're in line with the forecast, it should be all right because we're still above zero, right? We're still in that positive environment, even if it is a significant slowdown. Still, that seems to be the biggest one on the table, other than any kind of gotcha headlines or something coming out of the DC area. The rest of this really just looks like chipping their teeth. I think Bloomberg's going to have somebody on today around 1 o'clock. I think it was. Oh, shoot, I can't remember who it was, but they're going to be interviewing somebody today. I'll figure out who it was. That could provide some violence, but it's not on this list, so it's going to be. I want to say it was Waller, but I'll find out. I'm pretty sure it's. We got some auctions today. They're really close. They're in the front end, so you could just look at the IRX. We could get information tonight with Japan, this foreign bond investment. So if you're trading tonight, keep your eye on that. Don't forget today we're supposed to get crude oil inventories because of the short week that we had. They're going to come in at 2 o'clock, which is a little odd compared to what we normally get. They normally come in at 10:30. The market is pricing in 2 rate cuts by the end of the year. That's a significant amount. And there was talk this morning on Bloomberg that they're starting to see more and more analysts considering a 50 basis point rate cut at one shot. I'm not seeing that in this yet this morning, but that's something to consider as well. That would certainly light everything up. So 8:30, 10 o'clock, and 2 o'clock. And then I'll figure out who Bloomberg is interviewing and when they are going to be interviewed. We're above the zero gamma volatility trigger. We got the put wall at 65.50-ish. We can see the 10-week really close to us. And then we've got this cluster of moving averages. The 3, 10, and the 20 are all wrapped up right here, just above 6,700. So breaking 6,700 puts us into that zero gamma, the 3-week moving average, and then it's a straight shot to the low of the week and that 10-week moving average. Now we still got the levels here, and it's worth noting we're back above the midpoint of this really big bar. Now that one bar is the range of last week, basically. I mean, it doesn't change much if we just bring this up there. So 66.80 or 66.75, who cares? It's close enough. We're above that level. And as long as we're holding above that level, we have the capacity to continue to hold and or rise from here. Breaking that level is where the shenanigans start. Now you can see the 3 moving averages, they're all tangled up here. We're getting a 310 cross to the upside. That's a bull surge signal. And we're back above the 20. So it's a bull surge signal with momentum. But we are inside this previous day's range. And we got to account for that now. So we want to keep that range, stay above the mid, continue to press against this 67.60 area, and get back up here to that liquidity gap that we've talked about. It's basically 6,800, right? It's where all of this started back here. 67.90, maybe. What did we call it yesterday? 67.92. The liquidity gap was also the cog line. And we still have not set a lower high after this fall. None of this yet counts, right? So we would need to significantly draw back and leave an exposed pivot behind and then look back and say, yeah, that was a lower high. But we don't have that yet. So we still don't have a lower high. Of course, we also don't have a higher low here either. And the concern is that we're going to fall back, break this low, put in a new low, and then we would have a lower high and we would have a lower low. But we don't have that yet. And as long as we're holding above this mid, we don't even have the play for that. One of the ways that all of that could begin to unfold is one of my favorite trades, yesterday's 111. So with that in mind, we would be looking for price to get back up to yesterday's high, attempt a breakout, stall into the 111, and then come crashing down through each of the levels. Now, it doesn't have to even get up there. We could reject before that because we can see that we've got options levels here, 67.47. That's one of those options levels. So we could stall out there and never even make it back to the high of yesterday, begin the rollover, and work our way down. Either way, I'd rather short from the highs than short from the lows. But we don't have any signal to do anything yet. We're still inside day, and we got to resolve that. Yesterday was a textbook, perfect example of my yesterday's 111 on the NASDAQ. You should really consider that as one of your trading strategies if you don't use it yet. It's really easy to do. You can see it coming from a mile away, so it never sneaks up on you, and it pays really well. So what I just measured here was Tuesday's price action from the highest level to the lowest level. And that gave us a 111. When price ran up yesterday and broke out, that's what we stalled against. I call this setup yesterday's 111. Even though it's called the 111, sometimes we can get into the 1, 2, 3, 6, but usually it's the 111, which is why I call it the 111. That same measurement can be drawn on the intraday too, like this area here yesterday when we did roll over. That's not generally how I draw it, but I don't want to confuse people who don't know how I normally draw things. But there's your 111 reversal and move back up. The way I would generally draw it would be like that. And it would have been done on a 5-minute. So it would look like that. There's the 111 reversal and the move back up. It's not bad. It's, 75 points, 50 points, depending on how you want to play it. And like we've talked about with those reversal bars, I mean, that's as good as it gets, right? In the real world, when you're getting out of the textbooks. We're looking at 86, so we're still holding in elevated volume. It's not as bad as it was, considering the 180 and the 200 plus that we saw earlier this week. But in the high 80s is still higher than what we're used to. It still shows active participation. We don't see a market maker move this morning, so they're not hedging into any of this data that's coming in. And it is OPEX for the SPX, right? We've got that. You got that to deal with today. So that's going to throw the trade volumes off a little bit. The upper ADR is 67.50. Well, the upper ADR half. It's still inside yesterday's range. Both of these are. So we could easily tag either one, and really both of them, considering the volatility we have. And it wouldn't be bearish or bullish to see either one get tagged. And if we get a breakout of yesterday's range, we could get a 111 reversal off of either side. You can see how it's just in front of this 111, 66.44. and it's on the back side of this one up here. So it's doable. If we get a breakout of yesterday's range, aim for the yellow line. That's the full ADR on the top side or the bottom side. GTFO, as it always is, get out of this box first. From this box, we'll focus on yesterday's range, get out of that box, and then you got the 1, 2, 3, 6, and the 111 of yesterday. Today's floor pivot has a very narrow channel, and narrow channels imply that if we break out, it could stick and we can run, which means the 111 and the 1, 2, 3, 6 would be broken and we would continue to go. I've had people ask, what are we breaking out of? Because they're not grasping this logic here. This channel around the floor pivot is saying that if we break out of yesterday's price action, that we could run, that we wouldn't break out and come back in like we did yesterday when we broke out and we came back in again. Just keep in mind that this channel, it's not going to make price break out. And even if we do break out, it's not going to make us continue to run. This channel doesn't make price do anything. It's just giving us some insight on if we was to break out, do we expect it to fail and come back in, or do we expect it to run? Now, I shared some comments on some of the analysis of the different tools that we've got available, right? The GEX levels and dealer hedging, and the considerations are that breakouts are likely going to fail and that we're going to come back in again unless we get overwhelming flow from some sort of news or something else of surprise that we can't see yet, because there's so much optionality around price at the moment that it's with the expected dealers behavior, we're just going to fail to get anywhere, like yesterday when we tried to break out and they sold into that strength and brought us right back in again. Of course, they also bought into that weakness yesterday against the floor pivot and brought us back in again. So that's still the expectation at the moment, is that dealers are going to continue to perform that same way. They'll sell into strength, buy into weakness, and keep this from making big, violent moves like we saw last Friday. But like last Friday, if headlines come in, we can go. Same with Tuesday afternoon, right? That's all it took was a headline, and we started to take off. Because of yesterday's expansion, the S&R levels are likely to be a little wide. No, they're not bad. Not that bad. R1 to S2 is the base case argument. R1 is just outside of yesterday's range, so that's not even into a 111 yet. We would likely overshoot the R1 and then come back in if we're going to come back in. While the strategy says R1 to S2, it doesn't owe us an S2. And we could just stay between R1 and S1. We could just do that today. This is a lot of violence, and we're putting in a lot of volume across this level up here. So it's just a really big topping pattern at the moment. Today's floor pivot opened higher than yesterday. That's bullish. price opened above it, that's also bullish, and we've hit it already. So we don't have a drag or a bias trying to pull us back down to it. 6711 cog line is basically where that floor pivot is. We're above the weekly, and that still maintains our bullish bias. Looking at the profile on the week, we're still in a very clean distribution. We have that D-shape pattern with a lot of structure at 66.95. We're outside of the value area, and it's getting thin. So with less footprints, we can move through those levels a lot easier. It just doesn't mean that we're going to, right? We have to consider other markets and what they could hit and how that can react to our market. Still, this is a really nice distribution. It's well contained within the value area, and we have to consider that that's our structure to lean against, 6,700. It would very likely take a lot of a significant headline, a lot of flow, a lot of push to get us below that level. To the upside, we've still got last week's point of control, 67.88. So if we do get a breakout on the week, new highs on the week, then that would be the target, 67.88. Day 30-minute volume profile and TPO. We got this really nice structure up here, which makes it easy to see where everything is that we've got to fight against. The current point of control is basically the high that we have for the week so far. And that's what we have to get back above. The problem is it's where the greatest amount of trading volume has taken place in the last 10 days. And it's likely that when we get back up there, we're going to see trader's remorse. Now, you can call it a lot of different things, but I think that one really just sums it up. And it's the one most easiest for new traders to understand. Trader's remorse. If you got in there to go long and you've been holding through all of this mess, you're going to be very excited to have a chance to get out. If you got in there to go short and you held through all of this mess, you're going to be really disappointed and you're going to want to get the heck out, right? That's the logic. Or maybe you missed the whole thing at that point and you didn't get filled with the size that you wanted, and now it's there again and you got a chance. So many ways to read that it's just everybody who has an opportunity or an agenda has a chance to trade at that level when we get back there. And it must have been a level that everybody else was interested in, because that's where the greatest amount of volume took place. We don't expect that level to move anytime soon, but the TPO is giving a preview of where it's likely to go next. So if it moves, that's very likely where it's going to go. It's not much of a shift. We're not expecting to see it drop down below us, 66.92 cog line, until later in the week. So while we're dancing around this week, we do kind of want to see us close above 66.92, so that next week, when that point of control does move down, we'll already be above it. We won't have to fight it. We won't have to jump it. And then we'll have that for structure underneath us. We don't have a VPOC for today. We've already hit that level multiple times, and our own value area low is yesterday's point of control. We do have a discrepancy between today's TPO with a profile point of control way down here, 67.11 cog line, and the volume profiles point of control, 67.40 way up here. Now 67.42 is an old cog line. We don't mark it anymore, but it's a significant level you want to keep your eye on. We've got multiple distributions like we've been seeing lately. So this isn't, a nice, clean, classic case, B, P, or D. But there's a lot of trading going on. We're still in elevated overnight volumes. And the expectation is to see this get caught up, right? This is highlighting at the moment that there wasn't a lot of trades, but there sure was a lot of volume in those trades, as opposed to what we saw down here, which was a lot of trades with single-digit numbers. So a lot of small trades. This was a lot of big trades. We're still holding above the 10-day, but the 10-day is in sight. So is the 10-week. This is the zone or the range that we like to see price sitting in. As long as we're within 1% of that 10-day, then the market's doing good. If we start to expand more than 1%, we have to start considering overbought, oversold, extended, too far, too fast, mean reversion, but we don't have that right now. And a classic example of that was this move the other day, right? That really swift move on Friday was quickly erased. Too much, too soon, Junior. Or back here. Too much, too fast. So looking at our distance from the 10-week, there was no distance. Now we're back above it. More than 2% above that 10-week. And that's what we're looking to keep. All right, so that Friday reversal took us all the way down there. Now we're working our way away from it. 2% is good. It's healthy, solid. When we zoom out, though, one of the things that you may notice is the lower highs, that this thing kind of stair steps down. It doesn't have to. It can just drop like a stone. But a lot of times, price works its way down, right? It doesn't just fall off a cliff. And that when we get down into that 10, we bounce off of it, we digest it, we move around it, we come up off of it. But each bounce back up off of the 10 bounces less, right? So like you come down into a level and you bounce, and each bounce is less. Kind of like when you throw a ball, right? Each bounce has less energy than the previous bounce. So that's kind of what we're seeing when you zoom out a little bit. And it's what we've seen before. Less and less and less, and then you get one of those. We're still broke out on the week. The expectation is that we're going to keep that on the week too. 66.92 cog line is the week's high for the weekly expected move that we're broke out of, and we're headed to 67.92 gap close. That's the target we're focused on. Just not all in one day, right? All right, looking at what's down this morning, the VIX is down. The Mag 7 down volume is down. And really that's about all we got. Flip things over, looking at what's up this morning. We got uranium, China, Mag 7 up volume, chips, gold miners, quantum, metals and mining, China again, junior miners, tech, expanded tech, Mag 7, growth ETFs, small caps, energy, and Bitcoin. Now, the thing about that expanded tech, this IGV, I'm always interested in trying to help people with this morning list. Thinkorswim doesn't necessarily differentiate between what happened after hours and what happened in the pre-market. As far as it's concerned, it's all a part of the pre-market. So you'll see something like IGV up, 0.8% and think, oh, it's up this morning, but it might not be. Don't assume that it is. Just go check, because what you'll often find is it was up after hours, but it hasn't done anything this morning at all, and it'll still show, hey, it's up this morning. No, it's not. It's up from last night, and it's not doing anything this morning. So if we come in here and look, it is moving this morning, but we're not getting real flows. We're just getting these little dashes. So it's more of an algo print than anything else. Still, at least it is this morning's print and not last night's print. So Thinkorswim, it does okay. It gets the job done. But if you have anything else like TradingView or TrendSpider, there's a lot of other places that do a much better job when it comes to morning scans and things that are up or down in the pre-market. So we got uranium, chips, pot stocks. You don't want a rally day on pot stocks. Gold miners, China, solar, tech, gold, cloud. Now, cloud's another one of those that is a bit sneaky when it comes to, is it moving in the pre-market or was it just moving after hours? And we can see it's a pre-market tick, but it's just a tick. It's also right up against yesterday's high, so we're looking for an inside day breakout in cloud computing, which would be really nice. I mean, that'll really help for a bullish breakout in the indexes. If you're looking at like Google, Amazon, Microsoft, everybody involved in cloud services. But it's not fulfilling any candles yet. It's just a little algo tick. So we want more than that. It's a good start. And it's certainly better than that tick down from last night at 5 o'clock, which was way down here. So, we'll take that. But we need to see it follow through. We got some China, and then just some generic tech, the Qs, Mag 7, energy. It's good to see. Bitcoin needs to put in some work. There's a lot to dig into over this uranium statement about the military bases using their portable nuclear systems to power the bases and how they're going to integrate with civilian companies to get this done. I haven't had a chance to really dig into that yet, but it's like we were talking about yesterday. I don't see how it can be Oklo or one of those others. They don't even have a real product, right? They're just smoke and mirrors at this point. We're talking about devices that already exist that they're going to be putting into action out in the field. So these aren't some 10-year pipe dreams that are coming down the road. These are going to be happening now. Well, what companies already have products now that they can deploy? That's going to be the question, right? That's going to be what I want to dig deeper into. So with these sectors up this morning, especially SMH, Bitcoin, gold, cloud services, we can run. We could absolutely get a breakout rally day. Keep in mind, it doesn't owe us a rally. It doesn't owe us anything. And it's still going to be the same scenario that we always have. You got to get out of the box, right? So GTFO, get out of this range first. Then you've got this really big range of yesterday to get out of. Once you get out of that, then you have an opportunity to expand. But to the downside, it's the weekly floor pivot. And to the upside, it's that 6,800 level. So we've got a lot of structure on either side of us holding us back. And we're expecting dealers to sell into that strength and buy into that weakness, which is going to hold us back even more. So we can get through those levels. It's just going to take one heck of a headline, a lot of flow. Short and sweet. It's what I got for you guys. Be careful. Be safe. I'll see y'all tomorrow.